Guys, it's Jeffrey back with another video, and today we're going to talk about marking up support and resistance levels on your charts. I've been getting a ton of questions about people asking me, how do I know which level is a support level? What time frame should I be marking up my support and resistance levels on? And I just thought I should make a video that kind of explains what you should be looking for on your charts, how to mark up the actual support and resistance levels, and basically once price hits that level, what should you do in order to basically enter a trade or whatever you're looking to do in that situation. So let's go right into the charts, and for this example I am going to use USD JPY. No particular reason, just because it had pretty clear price action for us to look at and study, and the other pair has been kind of consolidating. But this isn't a pair that I trade regularly. I do trade it sometimes, but primarily I like to stick with Euro USD and GBP USD. So that's the fiber and the cable. Okay, so let's, actually I think I'm going to have to move. Yeah, okay. So looking at this chart, let's break it down, and we're going to mark up all our support and resistance levels starting from the monthly chart, and we're going to work our way down. So just in case you didn't know, any time frame that we're on represents the time of the candle. So I don't know if that's a good explanation, but we're on a monthly time frame right now, so that means each candlestick represents 1 month in time. So this candle that we're on right now is the current month of March, right? So the month of March is about to end, and we're going to go into April, so we're going to have a new monthly candle, okay? So anytime a new month starts, I like to basically start with a fresh analysis from a monthly time frame and basically, break it down from the monthly all the way down to the lower time frames and see, what kind of price action that we have and what we're looking for going into the new month. So starting off with it, I typically use this horizontal line, and you can basically mark out, your levels like far back and stuff like that, but typically I like to stay like within, the current area of price that we've been trading in for a while. So if you look, again, this is a monthly time frame, so basically since October 2016, we've just been in this consolidation and we haven't broken below this low. So this swing is basically where price has been trading for, almost a year. Not fully a year, but for a while now. So, well, actually it has been a year, because right here is, oh no, yeah, a little less than a year. So how do we mark out our support and resistance levels? Well, first things first, I like to mark out basically the high. So I like to do the resistance levels in red, just because I know that if I'm on a lower time frame, it'll be a resistance level. And we can actually make the line thickness a little bit thicker so we know that it's a higher time frame. So the high is 118.66. So we'll just mark that up. And I'll name this monthly key resistance. Okay, so now if I hover my mouse over it, it'll say monthly key resistance. And basically, if you hold Control and click on it, it'll make a copy of the line. So then I'm going to put it at the low. And then I'm going to make this blue. And then the low is 98.99. Okay. So I know I'm going a little slow, but I just want to make sure that everybody kind of gets this. Anything else aside from this, what we've already marked out on a monthly time frame, is really unnecessary. Like, I don't need to mark out this level down here. I know it's a support level, but I mean, realistically speaking, this is a monthly time frame. I don't expect this thing to drop 30,000 pips, in the next month. So that's why I like to just kind of stay in the range that we're currently trading in. So okay, so I know a couple of you have probably watched previous videos, and I talk about ICT bullish order blocks, and all that is basically a down candle before a move up. So if you want to, do more research on these or anything like that, just look up Inner Circle Trader ICT on YouTube, and that's basically where I learned everything I know about price action and technicals in price action, because that's exactly what he teaches. So this is an ICT bullish order block. It's a level of support. So we're still on a monthly time frame, but one thing that I'm going to watch out for is I'm going to have this marked out in case price basically will find some support here and then start to trade higher. I know that if we break below this low, then more than likely we're going to want to continue lower, right? Because it'll confirm the downtrend, because we've got a high, a low, lower high, and then if we break below this low, that'll be a lower low. So that would confirm a downtrend on the monthly time frame. Now, I actually got a question earlier today where someone asked, how would I know when the market is going to reverse? And basically, when the market's going to reverse whenever you see the market trading into basically a monthly or even a weekly support or resistance level. And typically, it could be a daily as well, but typically it's a monthly or weekly, because those are strong support or resistance levels. So when it hits there, typically price will have a reaction the opposite way, because it's either finding support or resistance. So let's mark this out real quick. The high of this candle is 104.318, and the open is 103.42. Okay, so what ICT teaches is basically it should find support between the high and the open of the candle, and it could come deeper into the candle, but you just don't want to see the low of the candle break. So that low comes in at 106.08. So we can actually mark that out. And then I'll put monthly bullish order block low. And keep in mind that's close to our monthly low here. So we already know if it gets close to this, then we're going to want to break below here. So just to kind of map this out, we could see something like this. We could see a move down, and once it breaks that, we would be expecting a retest. Why would we be expecting a retest there? Because this is support, right? So once we break that support, it should act as resistance. So I'm not saying this is what's going to happen, but I just wanted to outline the scenario so you can understand like why I have this support level marked out and what it means if it breaks below it. So if it finds support there, then okay, we know that we're going to be looking for buying scenarios on a lower time frame. But if we break below that, then we're going to be looking for short scenarios. Okay, so let me delete that. And so we've got the bullish order block marked out. Okay, so now I've basically got all my levels on a monthly time frame marked out. So now what we can do is we can move down to a weekly. Zoom out. And keep in mind, as we drop down lower in time frames, the levels that we have marked out on the higher time frames are going to be, on these time frames as well. So you kind of that's why I use thicker lines for higher time frames, so I kind of know what I'm looking at, and then I'll mark them out by saying monthly key resistance, monthly bullish order block low, so I have an idea of what I'm looking at once I get on a lower time frame. So now that we're in a weekly, we can basically continue marking out our support and resistance levels. And now that I'm on a lower time frame, I'll use the trend lines versus the horizontal lines, just because I don't want to have a lot of crosses all over my charts with lines going back over here. So what I mean by the trend lines is this up candle here before this down move is classified as an ICT bearish order block. So that would be a level of resistance. So we'll mark that red. And this is what I mean by drawing the trend line, right? I don't use trend lines as in connecting price, like to tell the trend, but I use the line just, like this, so it's not basically all the way across and it'll be confusing. Now, some people, whenever they're marking out support and resistance levels, they like to be like, okay, so if the candle touched here, here, and touched on this line multiple times and is classified as support, and that's fine as well if that's how you see it, because I guess you could consider this support, came down, support, broke through, should act as resistance. I'm basically looking for the same thing. I just don't, I'm not drawing it out all the way across. But I see price action just how ICT taught it by the bearish and bullish order blocks, which are key support and resistance levels, especially on higher time frames. So let's mark this low out at 108.41. And then we'll label this weekly bearish order block. All right, so now we know that's there. Oh, and also another thing I like to do, I like to go to visualization. As I'm dropping down time frames, I check off the boxes. So basically this line won't show on a monthly anymore. It'll only show from the weekly chart down. So that helps as you're doing your analysis, because if this is showing on a monthly chart, then if you're analyzing, it could look weird. So I'll do that, and now we need to mark out any support levels we see. So we've already got this monthly bullish order block marked out, and there's really nothing else that we need to mark out below price. It's mainly just what's above price. So if we take a look here, now the reason I'm using this level is because technically it is an ICT bearish order block. If we come out to this candle here, it's an up candle before a move down, but I just kind of see it as, you could tell it's a level of resistance, right? Because we've came up, traded lower, came up, traded lower, came up, traded lower, came up, then we ultimately traded lower. So if we do get, because we know that this is a monthly level right here, if we do get some sort of like reversal scenario and price doesn't want to continue lower and we want to start pushing higher, this is more than likely where they're going to want to go, because it's a key level of resistance. So what that means is basically there's a lot of stop losses and orders built up above here. Basically another thing that ICT teaches, and there's a lot of liquidity. So we're going to be looking for the market to eventually trade back up here to clear out the liquidity that's up there. So I'm going to keep that level marked out, and I'm just going to name this, I'm going to check off the little boxes, and we're going to name this weekly resistance level. Alright, so now that we got that marked out, so let me draw and explain what I mean by all this. So if we start to continue pushing up here, right, this is a resistance level right now. It's an ICT bearish order block, and it should act as resistance. If it breaks above it, it should act as support, right? Hold resistance, now turn support, and we could be looking for something like this. Okay? And the only reason that this could be a potential scenario is because we have this monthly block right here. So since it's a monthly level, it's a strong key higher time frame level. So anytime it trades into that or gets near it, basically you're going to typically have some sort of reaction. So we don't know if that reaction is just going to be up here to hit this resistance level and then trade lower, which would basically look like this. Trade up, hit it, sell off, and then make new lows. We don't know if it's going to stop there or if it's going to break above it and retest it. So we need to basically have out, in your journal or in your notes, in your head, wherever you keep it, that basically that's a scenario that could unfold. But if we break above it, then we could find support there and look to trade above these highs. So you need to keep all these things in your head whenever you're marking up your charts, or keep like a little notebook next to you. That way you could just basically write, anytime that I have something that I'm looking at or something in the charts, I just keep like little notes of it in this little book next to me on my desk. So that's a good little practice if you're not already doing something like that. Okay, so now on the weekly time frame, we basically have all of our key levels that we're going to be looking for. So as we get on the lower time frames, I'm going to explain more in detail of what we're looking for at specific things, because we have this level marked out. Now, if it gets up here, how do we know if we should sell here? I'm going to get to that as we get into a lower time frame. All right, so let's drop into a daily now. So we've got all our monthly and weekly levels marked out. Hold on, getting a FaceTime. Okay. All right, so looking at this on a daily time frame, let me actually get my little Eclipse tool. All right. If we look right here, we made a high, then we made a high, then we made a low. Okay? This low right here indicated, okay, we should have continued, we basically should have continued lower, right? Because we made this high, and then we made a low. I'm sorry, what am I saying right now? This high, high, low, high, low. So we should have continued with the bearish price action, right? This level right here, these up candles before this push down, should have held as resistance. So whenever we traded above this, this indicated, oh, okay, well, we've broken the resistance that should have held. So now this could potentially be acting as support. So let me delete these little levels. I just want to indicate, I wanted to indicate that we were in bearish market structure, but we've broken above that now. So let's see what could potentially unfold. Keeping in mind what we've already seen on the higher time frame, we know that we're near a monthly level, so we could get a potential reversal. But we know we have the levels marked out that we could potentially trade up into that could hold as resistance before trading lower. So let me basically draw this out. If we look at these up candles before this push down, ICT bearish order block, should have held as resistance, right? If you look at this candle, okay, I know it's kind of hard to see, but look down here in the corner. If we were trading, we made this low, and then we traded up, and then we traded up into it. So on this day, we could have been thinking, oh, well, this is a solid sell because it looked like it found resistance, and it should want to trade lower. Well, if we look the next day, it didn't trade lower. It shot up and broke the resistance level. So when we see a move like this, we basically consider this, well, it is a break in market structure because now we've broken this high. So we made a low, and then we made a higher high, right? So if we find some support in this gray box, which was an old level that should have held as resistance, should now be turned support. We could basically see a move like this Sunday and Monday and trade up into this level here. Okay, so this may be a bullish week for USD/JPY. Again, we don't 100% know that until we start, getting some price action unfolding after the market opens. But looking at this, we can consider this a break in market structure. It could find some support at this old resistance level, which was this ICT bearish order block. And if it does do that, then we're going to expect higher prices. All right, so we're going to keep this gray box marked out. And we're going to mark out the nearest high. Okay, so this is at 107.008. And then this is the most recent daily high. So let's break out the circles again and let's look at this. So we've got a low, and then now we've got a high that formed. So think about this. If we form a higher low right here, and then we break above this daily high, what is this? Bullish market structure, right? On a daily time frame. So I'm just trying to, take this really slow to make sure that you guys understand. So low, high, higher low, higher high, then what we would expect again. Another higher low, right? And then we'd be targeting this high. So I'm just trying to map this out so you can see it, but that's basically what I'm looking for when I see things like this, right? So we're at a monthly level. We've gotten a break in market structure. We could be finding some support at this old level of resistance. If that's the case, we break above this, then, yeah, we're probably heading up to this next level up here, which is 140 pips. So we don't have to do anything. We just need to wait for market to break above this, retest it, and then we can get on board and target this level of resistance up here. Okay? Alright, so if we're looking on the daily, we don't really have anything else that we need to have marked out other than this low. And the reason being is because if we break back below this low, well then we know that we're in a bearish market condition again, so we should head lower. So we're going to make this blue, and we're going to name this most recent daily low. Alright, and then before I forget, I'm going to make sure that these lines are only visible on the daily time frame and lower, so I don't get confused. If I look at a weekly chart, I don't want to see these daily lines on there and not know what they mean. Okay. Alright, so now we're going to drop down to the 4-hour time frame. So let's drop down to a 4-hour and see what we got. Alright, so again, we still have our levels marked out. Got the low. So I want to map this out too, because you can see it a lot better as you're on a lower time frame. What I'm talking about as far as the market structure. So we got a low, then we got a high, then we got a higher low, now we got a higher high, and we should be getting, if you look at this price action right here, it looks like it's forming a low, right? We made a low and we're starting to push higher. So we're not saying that that is the low, but if it is, we've made a higher low, right? And we should be targeting this high for a higher high. So as you go on lower time frames, you can see that price action gets clearer, right? So you could have, as price was here, alright, so basically we were down here, and we had this high, then we formed this low. Once we broke this high, on a 4-hour time frame, we could have seen a break in market structure. So we could have waited for any move down into a previous level of support, which would have been this down candle here before this push up. We didn't quite come all the way down to it, but if we go on a lower time frame, like an hourly, 15-minute, there may have been a potential setup that we could have got on board this. So this is just an example of how you can get on board before the market structure happens, before the market structure break on the daily time frame happens, because you're on a 4-hour time frame. So you're trading basically, each candle is a 4-hour frame of time. So you have 4 of those, 4, 8, 12, 16. How many 4 hours is in a day? This is a stupid question. Alright, so you have 6 4-hour candles in a day. So that gives you multiple opportunities versus looking at a daily time frame and you have 1 opportunity. So that was just kind of a little side note as we're looking at all this, how you could have basically gotten on board with a trade before we had the break of market structure on the daily. And even if you didn't get on board that, it's completely okay, because now we have the confirmation on the daily that we should be heading higher. We could be getting a potential market structure reversal. So on a 4-hour time frame, we can mark out this level here, which is an ICT bullish order block. So if we are getting that reversal, then this level should hold as support, right? So we need to change this 4-hour time frame down, and H4 bullish order block, okay? And then again, it can come into this candle, but we don't want to see it break below here. If we break below here, then more than likely we're going to want to go back and test this whole level of support. And if we break that, then continue lower prices. So I'll map that out so you can see what I mean. H4 bullish order block low, and we're going to make both of these lines blue. Okay, so let's mark this out. If it comes down and hits this level, and it does start finding some support, then what we're going to wait for is on a 1-hour time frame or a 15-minute time frame, we're going to be waiting for confirmation. And what I mean by confirmation is we want to see a low, and then we want to see a high, and then we want to see a higher low, and then we want to see a higher high. This right here, once we break above this high, this indicates we've got a break in market structure on a lower time frame. So they've confirmed that they're using this support level to buy off of. So when we retest this level, we can look for a long, and we could be targeting this level here. So to illustrate what that looks like, this is the price action that we should see, okay? So it actually looks just like what we've seen right here. This is the exact same thing. We had a low, then we pushed up, we made a high. Then we made a higher low. Then we've pushed up, made a higher high. So we've broken market structure. So we're waiting for a retest of this and then to get on board to go long to continue for higher highs. So this piece of 4-hour price action is exactly what we would be looking to unfold on a 1-hour or a 15-minute time frame near this level right here, because this is a 4-hour support level, okay? Now, if we break through this and we break the low of the bullish order block, then we know, okay, they're more than likely going to want to take price lower. So what would we be looking for? We're going to look for a retest of this old support level. Why is it a support level? Because it found support here and then made new highs, right? Broke these highs here, made a break in market structure. So if we break below that, then where they were buying it here, they should look to sell some here. So we're looking for that retest for us to sell it, and then we're going to be targeting this low, right? So no matter what way they go, that's 70 pips. So if they bring it down and then start giving us bullish price action, then we can know, okay, we're going to take this for a long and then target new highs. If we start breaking below this bullish order block, then we wait for the retest and then we could short it for new lows. So now we've got both sides of USD JPY marked out. Whether they go up or whether they go down, we know how we're going to want to get on board for both. Alright, so now we can go to a 1-hour time frame. Okay, and on a 1-hour, there really isn't anything too clear that we should be looking at the moment. We've got this little down candle here. This is a down candle on the hourly time frame before we broke market structure and went above these highs. And we're finding some support there now, and it's consolidating around it. So will they hold that? I don't necessarily know. Because this is a bigger consolidation and it's also a 4-hour bullish order block here, it makes more sense for them to want to come lower rather than start just pushing up from here. But if we do, say we do hold this level here, right? So say this is the support level that we're going to hold. All I'm going to be looking for at that point is just a break in market structure, right? So it doesn't matter ever what they do, because we can get on board no matter what. We just have to wait for basically our rules and our trading plan to unfold in the charts, and then we can act on that. So if we start pushing up right away, because they're going to use this level as support, like just say that they do, then once they break this high, this would be a break in market structure. Why? Because we have a high, low, lower high, lower low, lower high, lower low, right? So if they hold this as support, we'll have a low, somewhere's in here, more than likely a high, a lower high, and then if we break this, we'll have a higher high, which will break this market structure here, and then we can look for a retest of this high, and then look to long it for new highs here. Okay, so it doesn't matter what they necessarily do. They can push it up right away, they can drop it. It doesn't matter, because we've got every single scenario that they could possibly do marked out. The market could only move two ways. It can only move up or down. So they're either going to push it higher, and if they push it higher right away, then we know, okay, this is what we're looking for. If we break this and retest it, well, we can buy it here and look to target these highs. If they start dropping it, well, then we're going to look for them to potentially find support. We're not going to enter it right away. We're going to wait for the support level to confirm that they're buying there. So that means we're going to see that pattern, trade into it, and then it's going to give us bullish price action where it's going to trade up, then it's going to form a higher low, and then it's going to break market structure, form a higher high, and we're going to enter on the break of market structure retest right here. Okay, so that's if we get that scenario. And then we could just trade all the way through this, and then that's fine too. If we get that, we're going to retest here. But what happens to a lot of traders is they get impulsive and the market starts moving down. So it starts running, and it's right here, and then they sell it. You shouldn't be selling it until you break this level, because they could come all the way down here, find support, not break this low, and then take it higher. So you have to wait for the scenario that you expect to happen to start unfolding before you just act on it right away, like out of impulse. You need to have a plan for what you're going into the marketplace for. So let me mark this out, 106.57. And this is from hourly. Okay. And this is H1 market structure high. And we're going to make this red. Okay. So I can make this a thinner line now because it's on an hourly time frame, just so I kind of have an idea of where we're at. But still, it says H1 market structure high, so we know what that is. All right. So that's really it. That's basically exactly what I do, at the start of each month for sure. But typically, during the week, all I'm doing is I'll start on the daily, and as each day closes, I'll just mark out any new levels we get. So, this day closed, then I'm marking this out as a bearish order block, and then waiting to see what we get next. This day closes, sorry, keeps going back on me. Comes up, trades into it this day. Well, I think it's holding, so we could be looking for shorts in this area. But once we start trading through it, then we know, okay, we've got to break a market structure, and now we need to wait and see what we get. So that's just kind of how I do it as I'm going through the week. I'll, just only go on the daily time frame and just update my levels from there. But since we're starting a new month, I figured I'd make a video, show you guys how I do it, so you can have an idea of what you should be looking for. And you don't need to have a bunch of lines on your chart. This is a level, this is a level, this is a level. Like, you're never going to know what you're looking at if you have all these, just, in my opinion, crazy levels all over your chart. So that's not really something that I'm going to teach you. But if you're working within a clear area, and most likely price isn't going to just start trading 30,000 pips down or 30,000 pips up. So just mark out the levels that are closest to you, so you're not getting overwhelmed by what's on the chart. And you can see how clean this is. We know what we're looking for, we're waiting for it, and as it happens, we know how we're going to act on it. So I'll touch on one last thing real quick. So we got this hourly high marked out that we were just talking about. So let me make this a little bigger. Alright, so say we break this. Say we break this level on an hourly time frame, right? So say it looks like this, like the candle. On a 15-minute, basically after we break it on an hourly time frame, I'm going to drop into a 15-minute like this. And at this point, I'm going to be waiting for a retest, or I'm going to pull my fibs on the, whatever the swing is, the swing low to the swing high, say this is it, and I'm going to wait for it to give me, a logical retracement entry if it starts pulling back, or it's going to find support at the market structure high. We never know until we basically see what's, forming. Like, is the candle, are the candles starting to turn? Are the candles basically, making big bearish candles down to retrace and form a wick, and then they're going to trade higher from there? We never really know until price starts unfolding, so we just have to see what we get. But typically, I like to just wait for the market structure break, and I'll enter on the retest, and I'll put my stop loss below the previous swing low, which in this case is 35 pips, and then I'll be targeting the new high, which is 43 pips, so basically 1 to 1. And I know some people, like, you can wait for these retracement entries down here, but sometimes we don't always get the retracement down to these levels. But think about, if you do, you could put your stop loss below this swing low here, and then you'd be looking at, a 15 pip stop loss versus 35 pips. So that's kind of how you would get tighter risk entries. And I do that. I just have to have the price action unfolding. So I just kind of wanted to map that out for you guys. But I think that's it. So if you have any questions, just drop them in the comments below, and I answer every single question or comment that's left on these videos. So I really hope that this made sense to everybody who watches it, because if you utilize this in your trading and in your charts, it can make a big difference, because you're operating off of higher time frame levels, the same thing that the banks and the big institutions do. And if you're basically trading in line with them, the likelihood of the trade going in your favor is a lot higher than you sitting on a 15-minute time frame like this, and you're like, okay, so we've got a wick here, this is a level of resistance, and then we got a support level here. Okay, so we're starting to trade higher. Let me buy it here. And that's just not a good way to act in the marketplace. You always got to start from your higher time frame and see, to get the clearer picture, right? Because how would we know, if we're looking at a 1 hour time frame, this looks like it's very bullish, right? Like, we're just seeing massive moves up. But if we look from the higher time frame, we're technically still bearish, because we had the high, low, lower high. We're still technically expecting a lower low. But we have this ICT bullish order block mapped out, because we know that we could find some support here. And if we do, we have the levels marked out that it could potentially trade up into before trading lower again. But we also know, if we break these levels of resistance, then we should retest them for support, and then we should have some buying unfold, right? So as we move into these lower time frames, we could see price action clearer and clearer. Now we see a break in market structure on the daily. Now on the 4 hour, we see a low, a high, higher low, a higher high, waiting for a higher low again, potential higher high. So you see what I'm saying? As we get lower and lower on the time frames, we could see exactly what price is trying to do. So that is basically how I mark out my support and resistance levels, and I hope this video helped you. Make sure to subscribe to the channel, and also hit the little like button right below this video. That'll help push this video to other traders out there, and just anyone struggling with trading in general. And I just want to make sure that people are getting the right information, because a lot of people put out content and they're just looking to make a quick buck and sell you something, or not really teach you what trading is. And trading is very hard, but at the end of the day, it can be simple once you understand it. You just have to get past, like, the mindset stuff and the basics of what you're looking for in the chart. And when you understand and see those things, then you're more likely to figure this thing out and start making money, and just in general, be a profitable trader. So hope you guys found some value in this video. Leave a comment below, like the video, subscribe if you enjoyed it, and I will see you guys tomorrow.